Hey guys, Doug the Retirement Guy. We have another one of our Dare to Compare campaigns. Which ETF fund is better for income? The NEOS SP 500 High Income ETF, SPYI, or JPMorgan's Equity Premium Income, JEPI? We did the math, and we have a clear winner. Well, let's show you today. NEOS, SPYI, and JPMorgan generate both income from options trading. And when we look at the returns that they're promoting and advertising, the return rate on SPYI is 19.45 versus the 12.56 from JPMorgan. So we give a thumbs up over to SPY. The 30-day SEC yield, though, is only 0.69 versus a 30-day SEC yield of 7.05 from JPEI. So we give them the thumbs up for that 30-day yield. It basically shows that JPMorgan could possibly be giving you additional or increased cash over a long next 30-day haul. Now let's take a look at the return over 1 month. You see that they're both about 2.42 and 2.49, about equal. We go to the 3 month and you see that SPY takes off at 4.94, JPI at 2.48. They actually lost a little bit in the 3 month period. When we go to the 6 month period, big change. SPY gets to a 9%, while JPI only stays at 1.48. The year to date, they both come back about the same, as you'll see with the same as the 1 month, because we only have 1 month in on this. And then for one solid year, they're at 19.85 versus 13.38. So to me, it tells me we have a true winner in SPYI for the total return rate. So we got to give that one a big thumbs up. So here what we're going to do is take the $10,000 investment and do it over a past 12 months for performance. We start off with JPI. $10,000 into it, $55.96 strike price. We would have bought 178 shares. If we run that all the way out for 12 straight months, we would have a $58.97 stock price, and which basically would have gave us a nice $537 increase, or 5.38%. When we get down to dividend payments for the income, we ended up at $694 worth of dividend income, or a 6.95% return. But there was one glaring error that we found, and that was in May, that JPI did not pay a dividend in the month of May. So realistically, you're only getting 11 months worth of dividends. Now we look back into the history, and we saw that in 2023, they missed 2 months of payments. So JPI, as strong as they are, they don't always pay their dividends completely out. So that was kind of a little asterisk and error that we have to watch out for. So again, when we take a look at this, a 5.38% return, a 6.95% dividend return, for a total return of 12.33%, which is what a lot of people look at and say they're strong with getting a 12% number off of JPI. Now let's do the same thing for SPY. $10,000 in, $48.56 strike price. That would buy us 205 shares. We go all the way down to it. The price went up to $51.52 for a $10,609 starting or beginning balance, which basically gives us $609 of profit. We look at the dividend side of it. Well, their dividends came in, they paid each and every month, and very well balanced between 49 cents and 52 cents per month. So when we look down to it over the past 12 months, the stock returned a 6.1%, a dividend return of 12.66%, or a total return of 18.75%. When we look at the charts to each other, you can see that both the timelines for both SPY and JPI show similar ups and downs because they're both trying to follow that S&P 500 mark to generate the income. So as you see, one goes up, one goes down. They're both fairly almost identical marks across the board. The charts also shows that they can hold their price value over time. Let's take a look at the summary of these two stocks. First, doing it stock return. SPYI 6.10, JPMorgan 5.38. The winner of that one definitely SPY. It's a slight victory, but you're getting a little bit more return off of your value of your stock. Dividend return. SPY posts a 12.66% return, while JPMorgan only gets a 6.95%. That's almost, I hate to say, but almost double the amount of dividend coming back. So if you're living off of your dividends, this is definitely one you want to have, and that's a clear winner, SPYI. And when we take a look at the total returns, 18.75 versus 12.33, I think we have a clear winner, SPYI. So the winner for your retirement account, clearly, it's SPY. When you take a look at the total returns of 18.75, that's a 6.42% increase over JPI. Your dividend gain, 12.66, that's a 5.71% increase in dividends alone. And then you take your NAV return, 6.10, that's a 7.72% increase. Those together give you the strongest return possible of giving you more income into your portfolio for your retirement account. So the clear winner in the S&P 500 High Income ETF is SPYI. Hey, I'm Doug the Retirement Guy, and I'll tell you this. If you like what you're seeing, press that thumbs up button. Give us a like onto it. If you like what you're seeing, hit that subscribe. Don't miss any of the videos and the channels that we're putting out there. And if you have any comments at all, put them down below. We love to hear from you. We're getting a lot of reviews. We're getting a lot of comments from people, and we're doing more videos to give them what they're looking for. Everything helps the channel. Thank you, and we'll see you next time.